Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to educate you so that you can feel much more comfortable and confident in having control of investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to know some of the secrets of how you go from being a full-time corporate employee to being a full-time successful real estate syndicator, investor, and asset manager, then guess what? You're going to want to stick around for this entire conversation, I promise you. Because today's guest is not only the father of 2 little ones, like 3 and under, he also started in real estate investing back in 2014. He's found out what it's like to go from being full-time as a corporate employee to a full-time investor, which is key. He's also realized what the power of mentoring is all about and help his assets to explode, where he has over 600 units in his portfolio. He's also the founder of 88 Real Estate Capital and the host of the really popular podcast, True Multifamily. Really excited to have on the show today, Mr. Justin Fraser. Justin, welcome to the show, man.
Billy, thank you so much for having me, man. That was an awesome introduction. Thank you. I'm grateful to be here. Love to see you, and really, really happy to chat about real estate today.
Yeah, love seeing you too, man. I know it's been like a year or so, but when I see you, you just make me smile. So I'm excited to to be here and share some stories with our audience. So, listen, Justin, one of the first things we like to get into here is really help everybody understand, what city are you in today?
So I'm in central New Jersey, which is just about an hour outside of New York, near Princeton, New Brunswick area. So if you're familiar with Rutgers University, that's a landmark, I guess, just up the road from us.
Oh, yeah. Cool. All right. So on the East Coast of the U.S., that's awesome.
Yes, sir.
And Justin, we also want to know, man, what is the most positive thing that's happened to you in the last 24 hours?
24 hours. Great question, man. I would say that, yesterday we had a sunny day here in New Jersey, and my son and I played with a soccer ball, a football, and a baseball. And he's 3, so he doesn't quite understand any of that yet, but he's starting to get it. And so he was really just kicking it really well and hitting the ball, the baseball. And I'm feeling those proud daddy moments. So I'm just having a lot of fun with him and seeing as he develops and is able to start playing with those things. So that was a blast.
Man, it's so nice when you can get that quality time and you see those little moments where it's just like, all right, you're playing, you've got the sports, or you're just having that one-to-one time. That is, that's awesome. Thanks for sharing
Absolutely.
that. Appreciate it.
Yeah.
So listen, Justin, I've highlighted a couple things, man, but I know that there's a lot more to your backstory, a lot more that we can learn about you. So can you go ahead and help us kind of fill in the gaps, things that you've done to help get you to this point in your journey?
Yeah. So like you said, I started in 2014. I had a new day job. I had just moved companies and they were paying me a bit more. And so I was like, great, I'm making more money, but immediately thought, well, what should I do with that money? I've never really been a huge spender. And so I knew I wanted to invest. And so I started researching stock market and other things and came across BiggerPockets and came across real estate investing and thought, oh, okay, well, I'll buy a rental house and put some money in and maybe make 15% or something like that, and that'll be great. And then by the time I retire, I'll have a whole house paid for. And I did it, and I found a property that worked and cash flowed and bought it, and was immediately like, oh, there's cash flow here. This is pretty cool. I should do more of this. And I really got the bug as soon as those rent checks started coming in. And so got a partner, bought a few more houses, learned how to do, private money. I'd put all my money into my first deal, so didn't have that much left. So I had to get creative and figure out how to do seller financing, how to bring in partners, how to use, private money, flipped a house, and just started, testing things out, different strategies to see what would work, and had a little bit of success, and then realized that apartments seemed to be a better model for my skill set. The market was getting pretty high, priced. I was spending a ton of time and energy to get like one house that might cash flow, $150 a month or something. And I realized like there's I can do a little bit more work or maybe a lot more work, but buy something that's 10 units or 50 units or more, and run it more like a business. And so I was a project manager for a software company. So I had the experience of managing people and budgets and timelines and schedules and all of that. And so I figured if I could get into apartments, it's probably more in my skill set. And, fast forward a little bit, I did it. I went and syndicated a 40 unit apartment complex with a mentor, with partners. And from there, not 3 months after I closed on that, my company had layoffs actually. So while I was planning to leave, probably within the next year, I was nervous. I probably wouldn't have made that jump as quickly on my own, but they made the decision for me. And I decided, if I could syndicate a 40 unit while I'm working full time, what can I do if I'm focused and building my own business? And from there, just started buying more property, partnering with a lot of folks, and now we've got a pretty big portfolio.
Awesome. So many things that we can unpack from there. But there's one thing that you've said a couple times as it related to where you were investing in the beginning and then where you went from there. You kept referring to you thought it was best for your skill set. Mm-hmm. And I think that's really important when you're looking to invest either directly or with teams of people. So, but help us understand, what do you mean by that when you're saying that it was best for your skill set in terms of with apartments, investing with apartment building? Well,
I'll give you an example. I flipped a house literally 10 minutes from the house that I live in right now. And I butted up against this project every day. I was at Home Depot 3 times a day. I made every mistake. I used a handyman I probably shouldn't have used. And like all these, I made like all the mistakes that a first-time flipper would make. But I realized like I didn't enjoy it. I didn't enjoy like the work that I was doing. I'm not very handy. I mean, I can do a little bit, but that's just not in my skill set. It's not seeing the end result, the whole process through. Flipping was not resonating with me as a person and with what I was good at. And so I think that when when anyone is thinking about investing, there's sort of 2 circles. There's like what you like to do and what you're good at doing. And so I want to live in the middle where I'm getting to do things that I like to do and I'm good at them, right? Mm-hmm. Because there's plenty of things I like to do, but if I'm not good at it, I maybe that's a hobby. I don't think that's where I can make my income from it, right? Mm-hmm. And so for me, realizing like that the apartment route, running the business, running status meetings and project planning and business planning and all those things, that was what I was good at. That's what I was doing for my day job, and I actually enjoyed that aspect of it. And so that's where I found a really nice fit with what I'm doing now with asset management.
Okay, fantastic. So you realized all the things that you've been doing before. You kind of had your the Venn diagram. You saw exactly where you found your sweet spot, and that makes a lot of sense, right? Because it is very different when you are managing. Let's say you're self-managing things, you're flipping things, and versus having an asset which is much larger, where you already have the team in place. And you can use a lot of the things that you were talking about before, which are the managing projects and budgets and things like that. So
absolutely
makes a lot of sense. Thanks for that. I also happen to know, Justin, that one of the things that you have had experience with when you were getting started was you were managing some of the properties yourself, right? Yes. And so I know that today as a syndicator, it's something that you don't do. I'm just curious, what did you learn managing properties yourself, and how that is helping you today in terms of being a much more effective asset manager and syndicator?
It's funny because that was the idea, was that I wanted to self-manage with the idea that one day I won't want to self-manage. And one day I knew that one day I would be hiring property managers. And I really felt like I need to learn how to do this myself. And, sort of like I looked at the first handful of houses that I did as sort of my sandbox where I tested things out. I tested new ways of borrowing money. I tested new ways of managing property, tested new ways of finding deals. And so a lot of that is paying off now. And so I made all the rookie landlord mistakes. I waited months for the check in the mail from one of my tenants. Just let them go on and on with not paying, and then
it'll be there tomorrow. It'll be there tomorrow.
Yeah. And oh no, it's in the mail, I promise. And like, it doesn't take that long. We're 20 miles away. So there's all these, mostly like tenant interactions, right? I learned, I made a lot of mistakes with tenant interactions in the beginning. Not even, on the screening process too, because I was letting the prospects tell me their sob story, and I was feeling their emotion, and I was saying, oh, it'll be better this time. Sure, you can come live in my house, and even if I wasn't, maybe flexing on some income requirements or something. And I learned the hard way, and I learned my lesson on that, which, one day after my first eviction, actually, this was my first house that I bought. Like, all my energy and passion and love went into this thing. And these guys, they stopped paying. And by the time I got them out, it had been 7 months where I hadn't collected rent. Wow. And I was just really devastated by that. I'm like, what's going on here? I'm not, is this something I want to be doing in the future? My cash flow numbers are all thrown off now for the year. But I realized that, I was not running it like in a business. I was running it emotionally. And that's what resulted in 7 months of lost rent. Even if they didn't pay, I should have filed, on the 7th. I should have followed the process that I said I was going to follow before I gave them every break. And so that actually, losing that money and that time allowed me to be a lot more strict now. And so as I'm scaling and running properties with hundreds of units, we really set the standard that there are processes and we follow them and we do not deviate. Except in a very, very rare scenario, like maybe we're going on right now with coronavirus, will we deviate from our standards and practices. And it's very easy for me to defend that, to defend the fact that we follow our processes, because I know what happens if you don't. And in that sandbox of that single family house and that rental property, I know I lost 7 months of rent over there. I can't do that. I could handle that on a single family house. I can't handle that on a 200 unit property. I've got to stick to those standards. So I learned my lesson, and it's definitely helping me now.
So, and it's great to hear you share that, Justin, because, when you've gone through that, and I've been there as well, right? So, and what you're saying, it resonates a lot with me. Because once you do have a process in place and your residents know that the process is not only in place, but you adhere to it, then usually you don't have such a decline in collections, or you don't have so many extra issues because it is a very transparent relationship, right?
Correct.
So I'm sure you've also found, aside from the increase in collections, you've just found you sleep probably better at night knowing that the process is in place, and that all your residents know that it's in place as well.
Yeah. And it's so easy to get caught up because owning the property where someone lives is an emotional thing. And I take it very seriously because people are building their homes inside the walls that you're providing. Yep. And it's easy to get caught up and get emotional and get caught in the story and all that. But at the end of the day, we're running businesses and we have our processes and we have to stick to them.
Yeah. So, and I appreciate you sharing that. Another thing, maybe it's not even really pivot, probably going a little bit deeper. So one of the things that I really enjoy about what you're doing with True Multifamily is you're talking about something that a lot of people don't really talk about, but it's really the part that most people should be talking about a lot, right? Everybody talks about how you go in and you bring the asset into your portfolio and how you dispose or sell that asset when it's time. But there's this whole part of managing the asset. And I know that you're focused on that really with True Multifamily. So tell us a little bit more about asset management, that passion that you have that you're now sharing with others all around the globe.
Yeah, thank you for the kind words on that, and that is true. You know, a lot of stories that you'll hear, podcasts. It's about finding money, finding deals, getting to closing, and popping the champagne. And my mission is to spread the word that yeah, you pop that champagne, but now that's day one. You just bought yourself a job, and now if you're doing a syndication and you have investors, you're now responsible to them, and their money is in your hands as the asset manager. So the asset manager is the person that runs the business of the apartment complex. And so it's the person that is responsible for giving direction to the property management. There's a distinction. Property managers are the day-to-day on the ground. They're signing leases. They're interacting with the tenants. They're coordinating work orders and maintenance requests. Asset managers sit a level above, directing construction funds to basically we need to take the business plan that we wrote when we were underwriting the deal, bringing on investors, and now we have to execute that plan. So through budgets, schedules, timelines, managing people, processes, that allows us to take that plan into reality. And so, especially if you're doing like a construction project, but then even in the ongoing management and maintenance, you're measuring KPIs on a weekly basis, and key performance indicators where I'm measuring not only how full is this building, but how much money did I collect this month? Because when you start to get to these larger properties, not everyone pays their rent on time, and so we'll see a big chunk of rent come in on the 1st and the 5th, and then it sort of dwindles down. But especially right now, every day I'm tracking how much money is this property bringing in, what is our delinquent balance, and there's a whole host of other data points that we measure on a daily and weekly basis. And so that is the person that has to do that is responsible for the business of that. And I keep saying that it's a business because if you're investing in a project, 50 units, 100 units or more, like they are businesses that you're buying into, and someone has to run that business. And that's what the asset manager does.
Love that. That is an excellent explanation of what the asset manager does, the role and the business that they are, or the business that you are managing and owning. So appreciate that. So
sure.
I know that you kind of had in your development, there's really been a before and after that took place. And I know that you were moving along in the right direction with your own investments in real assets and real estate. And then you made a decision to really go out and have a mentor. Mm-hmm. And I know that something special happened once you really gave into that mentoring relationship. So talk to us a little bit about what you were doing before the mentor, what your portfolio looked like. And then once that you made that decision to go all in and work with a mentor, kind of what's happened since then and what your portfolio looks like.
Sure. And the amazing thing is how fast it's happened too. It's really, I have to keep reminding myself of what's happened and look back, because I had 3 single family rental houses. I had flipped that house that took me forever. I'd done a few wholesale deals, and I was just looking for the next, house, duplex, maybe triplex, something like that to buy. And that's where I was really struggling as far as the market was getting hot and not really getting much traction. And I was trying to decide, am I good? Should I just keep these houses and focus in on my day job? But I wasn't feeling fulfilled by my day job, and I wanted more. And I realized I wanted to do investing full time. I didn't exactly know what that meant. I just knew I wanted to do more of it because I love the feeling that I get when I'm doing real estate and all the great benefits of it. And we can get into that. But the idea is that I was struggling, and I was running a meetup. I ran a investor meetup where people would come and listen and get educated. And so my friend Matt came, and Matt is an investor in our area, Matt Faircloth, who I'd known for years. I had actually, when I first started investing, he was running the meetup, and I was there helping him stack chairs and just wanting to be around and learn and be around the environment. And so Matt came and talked about a 50 unit that he had just bought, 49 unit that he had just bought. And the way he broke it down, I realized no, I could do that. There wasn't any sort of secret, right? The things that he spoke about that he had to do that were all things that I could do as well. Going back to my skill set, right? I can organize people to get stuff done. And so I could find someone that can help me raise money. I can find someone to manage the property. I can be the sort of the conductor and bring in all these people. but I was missing experience and credibility, right? Because I only had 3 rental properties. And so Matt and I had known each other for a long time. And so probably just a few weeks after that, I went to his office and said, look, I want to go buy a 50 unit. I can do it because I have these skill sets. I can do these things, but I don't have experience and credibility because I had called a broker that had like a 96 unit property for sale. And he was like, cool, what have you done? And when I told him, he was like, what business do you have being over here? There's no way. And it wasn't a rude thing. It was more like he's representing the seller, and there's no way he's going to put me with only 3 units in front of a seller.
He wanted to close. He wants to close the deal.
Yeah, he wants to be able to close. He wants someone that has a track record that is actually, they're not going to waste everyone's time.
Yep.
So I went to Matt and said, look, I need your credibility. So instead of me with my 3 units, it's us with our 200 something units, right? There's no, if we're forming a company, that's our company's experience, right? Mm-hmm. And then I need some guidance. Like, I need you to answer the phone and talk me through it. And, Matt had just closed a 200 unit property. And so he was like right in the thick of it. I'm like, I don't know what I'm doing. I know the steps, I've read the books, but there's a big gap between the theory and the practice. And so, we negotiated, and I said, I'll give you a piece of my piece. I'll give you most of my piece. And I got to give this, I know I'm going to have to give equity away to other people for other things. And so, we figured it out. And so it was great, because my mentality was not, that I'm going to go get rich off this 50 unit that I wanted to buy. But again, more like the sandbox model, where let me try this and then we can get to bigger things. So let me try to buy a 50 unit. What's involved in that? How many properties do I have to go see? How do I raise money? How do I go through the legal? How do I go through all these different steps? And so I did it with his help. I saw a whole bunch of properties. I was taking vacation days to go run and look at houses and apartments. And it was a lot of work. But the way we positioned it was, I was going to do the legwork, and he provided the 2 things that I needed, right? Which was the experience and the credibility. So I was able to really identify for him, like, this is how I see you involved. And we wrote it down, and we made an agreement. Like, I'm not like, one, I wasn't approaching him fresh. Like, we already had a relationship. So it's not like I just called someone out of the blue and said, hey, mentor me, right? The second thing is, I provided value. I said, in exchange for your, we estimated 1 hour a week for the calls. And I tried to be very respectful of that 1 hour per week. Here's the equity. Here's what it's going to look like for you when I go and buy this thing, because it's going to be about a $2 million property. It's going to be about this, about that. And so we were able to model all that out. Mm-hmm. And so he decided to go with it, to take it, really to take a chance on me. The fact that he was going to invest his time and reputation, by the way, because I was submitting offers with my name and his name and his portfolio and my portfolio listed on there, most of which was his. Mm-hmm. But I was respectful of it. And I didn't want to do anything that would tarnish his name or his reputation. And so I added way more value than, I got so much value out of it, but my intention was to add more value than I was getting, to give away more than I was getting back. And I think a lot of people make a mistake when they approach a potential mentor of like, hey, can you just mentor me? And it's so hard for someone to say yes and be vested in that person to mentor them, where I like the approach of, hey, I'm going to go do this thing. Here's how I need help, and here's the value that you're going to get out of it. And we both win that way. And that's what worked.
So the fact that you were really clear on the fact that you knew what you were looking for, experience and credibility, the fact that you put in the time, you put in the work, you were picking up chairs, you were learning, and when you went to your mentor, already, like you said, you already knew Matt. It wasn't that you were looking up somebody on a website or just somebody that you met one time and like, hey, listen, I've heard you have 1,000 zillion doors.
Right.
Will you mentor me? I think that is one of the things that I'm sure has led to the positive results that you're having, and also recognizing that you weren't looking just to make money. You were looking to gain credibility and experience. And that is so key, because many times you can get caught up in, you just have to get the biggest return and get what you can get out of it. And you really took an approach to say, okay, how much value can I give? And also not focused on just making money. So
it can't be about just making money, or it's not going to work, because people see right through that. Mentors see right through that. And yeah, it's about a mutually beneficial relationship. And the other thing to that is not exactly knowing what the result will be, right? I didn't go to those meetings early and stay late because I knew that one day Matt would mentor me on a deal and then we'd become business partners and all these other things. I just knew that I wanted to be around the people that maybe could help me or were doing what I wanted to be doing and wanted to learn more about. So I just inserted myself and started adding value. And you can add value by stacking chairs at a real estate meetup, or you can add value by giving someone equity. And like, there's a whole spectrum of how you can add value to someone, and it depends on what they need and what you have to give. And so, you have to just find where you're valuable. Like, if I were to approach a mentor and say, hey, mentor me, or let me know if you need any help with something, like, that's not as valuable. It's a lot more valuable if I come to them and I say, here's what I can do for you. Here's how I'm going to solve a problem that you're having. Now we have something to talk about.
Yep. I love those examples, and that's really helping to crystallize what it is that you're talking about. So, Justin, I want to pivot just on one last point before we kind of get ready to start to wrap things up. And I know we were talking about this before, and even when we met last year. And so one of the things that you were in a full-time job.
Yep.
You were going out, you were going out, meeting, building relationships in the real estate space. You were hosting meetups. You were really, really active. You have 2 children, right?
Yep.
And you're in a full-time job. And I also know that your wife works. So kind of talk to me about how important that family support system has been in being able to be on the same page, coordinate, recognizing that it's not always easy. Maybe give us a couple tips as to how you and your wife have been able to make it work for your overall family.
This is, and now it's worse than it was, I'll tell you that. But this is a point of discussion that my wife and I have a lot, which is, where are we spending our time and energy? And that's during the workday, at nights, weekends, everything. And so we really, family for me is a huge, huge priority, and spending as much time as I can with the kids and my wife is so important. But the flip side of that is, I also have a huge passion for what I'm doing in real estate, and my wife understands that, and we've talked about a vision for the future, and it's actually something that we actively try to work on, because I don't want to get so stuck in the real estate and going down a path of, well, it's for the future, it's for the family. And then I miss the next 20 years of my kids because I'm building a future for the family. And so we constantly are pulling on each other and talking about it. And now that I'm in, certainly when I was working full time, but now that I have assets and apartments, I have to go to them, and I'm traveling. And so every 2 to 3 weeks, usually I'm on the road now, pre-coronavirus, where I'm checking out my properties. I'm meeting with property managers. Sometimes we have a new property that we are doing due diligence on and we're looking at. And so there's a lot of flights, a lot of time away. I try. So she understands the vision. She understands why I'm doing it. She's super supportive. She gets it, but that's not to say she just lets it all happen. And so I try to be very deliberate. If I'm going to Kentucky to go check on our assets, I'm not building in an extra day beforehand to go to a horse race, and I'm not staying an extra night to go out drinking at the whatever. Like, I'm there for as long as I need to be there to do the job, and then I'm coming home. And that's not to say that we don't have fun when we're traveling. We always do. But I'm ultimately, I try to be as respectful of her time, knowing that it's not easy with the kids at home by herself, because I have a hard time with it when I'm home with the kids by myself, and she's never gone for 3 days at a time. So I can only imagine what it's like. And so I just try to put myself in her shoes, and we just have a dialogue about it. And we have a dialogue usually before the start of every month. It doesn't have to be a huge sit down thing, but we try to sit down and talk to each other. What does your month look like? Are you traveling? What do you have? And so she'll say, this week's a really rough week for me. I'd appreciate it if you could be home that week. And so I'll move things around. And so we try to, thankfully I can be flexible because I make a lot of the decisions on when we're traveling and where and how long. So I can work around that. But it's just about being, for me, just as respectful of her and her time and the sacrifice that she's making as possible.
So, so many different things you just said also resonate with me because we had it's just today we were going talking, and we took the boys out and we were having ice cream. And one of the things that this whole COVID-19 thing has done is given me more perspective, right, on the things that my wife is going through on a day-to-day basis. And we just kind of laughed, and I was like, how do you deal with them calling mommy 5 million times a day?
I don't know. I don't get it.
No. And so, yeah, so that is really important. We've also done that where we even share calendars, right? Because before COVID, I was traveling a lot, and between traveling back to the US for events, and even with my day job where I'm traveling a lot with customers and clients. So definitely resonates. And that being able to focus on your time and energy is one of the things that I heard you say, which is really, really important. So thanks for sharing that with us, because I'm sure a lot of us that are listening could use that, and just think about being able to get together. It can be informal, formal, but just that point in time where you can focus on making sure that your agendas are there, and you have to be flexible and things like that. So,
absolutely.
So many nuggets, man. So many golden nuggets that you've shared with us in this conversation. I really appreciate it. But before we kind of summarize things, I have this like little thing. I always love to ask the going long final 3 questions. But the thing is, Justin, I don't ever ask the questions unless you tell me that you're ready for me to ask you the questions. Are you ready?
I'm ready. Let's do it.
Awesome. Cool. All right. Here's the first question. Because, I live here in Barcelona. I really love living in Europe, and I really enjoy connecting back in the States. But I always want to know, like, what is your favorite European city, either that you visited or is still on your bucket list to visit?
I got the chance to go to Iceland, and we spent 8 days there. And so I loved Reykjavik. Really, I love the whole country, but Reykjavik is a really amazing city. And it's actually the first European city that my wife and I went to on vacation. I had been to Europe for work a few times, but that was the first time we went there together for vacation, and just had a blast. And I love that place. So
right, cool.
Yeah,
awesome.
love to go back.
Okay, Reykjavik gets the vote. So,
yeah.
Second thing, you've shared already a number of really important lessons with us, and because you've gotten to the point where you are successful and continue to succeed, you've probably made like 1 or 2 failures. I'm going to guess along the way, probably just a big guess, but
yes, sir.
If you could think of one lesson, Justin, that you could pass forward, what would that one lesson be for someone who is now looking to become part and more in the real estate investing world?
Mm-hmm. Well, I think that I made a mistake with my 40 unit, my syndication deal, where I had the wrong property manager managing my property. And I had vetted them, and Matt and I had talked about them, and I really thought that they were the right fit. But what I've learned over time is that the best indicator of a successful property manager is the fact that they are managing the same type property, same class, same size properties in the same area. And because going from a 10 units that you manage to a 40 unit property is very different type of property. And so the managers that I had were in the managing duplexes, fourplexes. I think they had up to a 12 unit that they were managing. And I thought, man, I'm going to be their biggest client. I'm going to get the most attention, and it's going to be great. And it wasn't, because they just didn't know how to handle a property of that size. So that, again, just to recap, that's what I've learned is, like, if you're going to hire a management company, hire one that has experience in the same class, like a C-class asset. If you have a C-class property, hire a manager that manages C-class assets of the same size in the same location.
I love that. It's I always talk about, if you imagine going to like a 3-star Michelin restaurant for dinner, and you have the person that is the McDonald's greeter at the door, right? They both are very good at what they do, but it's best to work with the type of person that understands the area. So no, that's awesome. So I appreciate that lesson as well. That's another nugget there. And then just kind of to wrap things up, what is the book that you are recommending right about now?
I recently read Traction twice, and I'm loving it because Traction is really providing the blueprint for how we are growing and scaling our business. And as I take on more and more clients and I partner with more people and we have more apartment complexes, we need the systems and processes and more importantly, the right people in the right seats. And Traction is providing the blueprint for all of that. And it's been very, very helpful for us as we grow the business.
Awesome. That is it's a phenomenal book. So Traction it is. Awesome. Justin, man, there have been, like I said, there's so much that you have shared with us today, from really looking at getting involved in real estate because you wanted to figure out how you could invest even more. You were doing that. You were doing it properly. And then, things happened at the office and it really gave you the opportunity to really put focus, energy, and passion behind something that was that you wanted to do anyway. And as a result, you realized that, hey, listen, in order to get to where you wanted to go, you found mentors. You were able to add a lot of value first. You, at the same time, were focused on building a relationship, getting closer to your goals. And this whole one of the things you're really helping us to understand is provide the proof of concept. And once you have that proof of concept, then get the understanding and be able to move forward, which has been phenomenal. And now we see today that, in terms of being an asset manager, syndicator, investor, you're doing that and doing it all in different states and in long distance, right? And so that's one of the things that we really enjoy here. So you've shared so much goodness with us, Justin. I know that I love being able to talk to you, be in touch with you, and I'm sure that everybody that is listening and watching, and by the way, if you're not watching us, you should probably jump over to one of the channels and yeah, I like that, saying hello, and check us out. So help us all out, man. What is the best way to get in touch with you or your team so we can learn more about you?
Yeah, well, you mentioned already the podcast, and that really is the best way. So the podcast is called True Multifamily, and we keep it pretty short, 20-minute episodes or so. And it's all about showing the real life of running apartments or multifamily property. What happens after the close? How do we add value to properties? How do we deal with contractors? How do we deal with all the unsavory things that happen in properties that people don't usually like to share? We really dig in, and I'm so grateful for the guests that I've had that have shared their stories. And I mix it up. I have guests, but then I'm also talking about some of the things that we have going on, because we always have crazy things happening with all of our properties. And so True Multifamily, we're on all the major podcast platforms, and the website is truemultifamily.show, and you can see me there.
All right, awesome. So truemultifamily.show, definitely check Justin out. And you can also check him out on all the relevant social media sites. We're also going to include Justin's contact information in today's show notes. So definitely check him out. Justin, thanks so much once again, man, for taking the time to share with the Going Along family.
Thank
greatly
you, Billy.
Appreciate it.
Great interview. Appreciate it.
Yeah, thanks a lot, man. And also too, for the Going Along audience, I want to thank you once again for joining Justin and I today. I'm going to also ask you to go out and at least share the episode with 2 or 3 of your friends, because we want to continue to build this community, this tribe with other like-minded people. So I appreciate you taking that action and going out and inviting and sharing today's episode with 2 or 3 other people. And don't be afraid to also leave a 5-star review on the conversation. Let Justin and I know what you thought about it. And I am really looking forward to welcoming you back. Look, I'm so excited. Welcoming you back to the next episode. And until then, go out and make it a great day. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.